So what if I told you that the single biggest mistake that most traders make has almost nothing to do with their strategy? Today, we're going to dive into the pretty dramatic story of a trader who went from a life-changing payout to absolute rock bottom, only to discover the one thing that truly separates the winners from the losers. And honestly, his story might just change the way you think about success.
This is Greco. He's a proprietary trader, or prop trader, which means he trades with a firm's money, not his own. And in his own words, psychology is, quote, literally the key factor. His whole argument is that you can have the best technical skills on the planet, but if you don't have the right mindset, you're just destined to fail.
And that really frames the whole debate, doesn't it? Is it about the charts, or is it about the character of the person reading them? Well, Greco's journey, from the absolute highest of highs to the lowest of lows, gives us a pretty powerful answer.
Okay, so let's rewind the clock a bit. Greco's story isn't one of those slow, steady climbs. No, it's a story of a meteoric rise followed by a catastrophic crash that nearly ended his career before it even really got started. It all kicked off in June of 2022 with this number, $10,000, his first major payout. Now, you gotta understand, for him at that time, this was life-altering money. He'd never even seen 10K in his life. He literally couldn't sleep for 2 days before it hit his account. He felt like he'd finally made it.
And right on cue, with that success came the classic trap, overconfidence. A huge ego boost that made him feel totally invincible. He genuinely believed he'd figured out the market's secret. A feeling that, well, it was setting him up for a brutal reality check.
And wow, did that crash come fast. That feeling of invincibility from June, it just evaporated. Over the next 5 months, every single dollar he had just vanished. The payout, his salary, his life savings, all of it. It all came to a head in December, when he hit absolute rock bottom. He was in debt and couldn't even afford gas money to go see his girlfriend.
But right there, in that moment of total failure, he had this profound realization, a light bulb moment. He stopped blaming the charts, he stopped blaming the market makers, he stopped blaming bad luck. He finally understood the problem wasn't out there, it was in here. His own psychology had led to the crash.
And this realization, man, that was the real turning point. He knew that to make a comeback, he didn't need a new, shiny strategy. He needed to completely rebuild his mind from the ground up.
So what did his recovery plan actually look like? Well, it wasn't about finding some new magic indicator. For 2 solid months, he took 3 crucial steps. First, he stepped away from the charts completely, just to break the cycle. Second, he replaced trading with studying, diving deep into books on psychology. And third, he started journaling, relentlessly digging into every single mistake to understand the flawed thinking that was behind it.
His comeback toolkit was, well, pretty unconventional. He read 2 key books, The Zen Trader and Best Loser Wins, which helped him internalize this new idea. His mistakes weren't failures, they were a premium education. Armed with that new mindset, he literally sold his personal belongings on eBay just to scrape together enough cash for one last shot.
And you know what? It paid off immediately. In January 2023, just 1 month after being totally broke, he hit a $17,000 payout. This new approach was clearly working. He then followed that up with another 20 grand and then another 15 grand, all in the same month. He was back.
And get this, it wasn't a fluke. This psychological transformation led to real, actual consistency. Ever since that comeback in January 2023, he hasn't had a single losing month. Not one. The foundation he built was solid.
So how did this new mental foundation change his day-to-day trading? Well, with his consistency back, Greco developed a more flexible philosophy. He calls it being an all-rounder.
He realized that trying to force just one strategy just doesn't work. So now he splits his approach. He has his 9-to-5 account for those slow, steady profits. That's his bread and butter. But then, for when he's feeling sharp and opportunistic, he uses separate, high-risk accounts to try for account flips, aggressively growing a small account for a really large payout. This lets him channel those aggressive instincts in a controlled, walled-off way.
Now, to explain how he handles the psychology of bigger numbers these days, he uses this great little analogy he calls the gummy band effect. Just think of your mental baseline for money as a rubber band. With each new experience, that band stretches, and your whole perception of what's normal just changes. Okay, so here's how it works. Your first $1,000 loss,
It feels devastating, right? But once you've seen a $5,000 loss, that same $1,000 hit, it doesn't feel nearly as significant. The band is stretched, and the same thing happens with profits. Your first 10K payout feels absolutely impossible. But after you hit bigger months, it just becomes your new baseline. You get used to it.
Ultimately, when you boil it all down, this is what it looks like. He now sees risk management and psychology as two sides of the same coin, and they are both far, far more important than any single strategy. A strategy is just a tool, right? Your mind and your rules are what determine whether you'll use that tool to build something that actually lasts.
And his biggest lessons weren't even just about trading. They were about life. He learned resilience. A bad day, a bad month, even hitting rock bottom for a year. It's just a temporary state. It doesn't define your entire journey.
This whole experience, from the high of that first payout to the low of being flat broke, gave him a totally new perspective. It really forced him to reconsider what he was actually chasing this whole time. After all the wins and losses, what did he learn was the real prize? And his answer, it's pretty surprising. He realized the most valuable currency isn't money, it's social connection. He found that having true friendships and family, things that fulfill your soul, it quiets that destructive ego that can be so dangerous in trading. It's a pretty profound takeaway. Maybe the ultimate trading edge isn't found on the charts at all, but in the stable, meaningful life you build away from them.